Welcome everyone to this week's live stream. We'll be getting started shortly. If you have any questions during the session, you can drop them in the comments. We'll be keeping an eye on those and we'll do our best to answer them live. If we don't, we will reach out to you personally. And now we can welcome your hosts, David Stoffaker and Linda Keith.
Hello, everyone. Welcome to our series on K1 and pass-through entities. I'm Dave Stoffaker, the Senior Credit Trainer with Lenders Online Training. And I'm pleased to be joined with Linda Keith, our Chief Credit Trainer. Today, actually, we're going to be talking about a topic that often trips up even our senior lenders and our experienced credit analysts. It's guaranteed payments on a 1065 tax return. Linda, why do you think a topic like this confuses our lenders?
I'm kind of wondering if there's anybody on there that's actually still confused. So guaranteed payments are not guaranteed. That would be confusing to me if the words that the IRS uses are not descriptive of the thing. So guaranteed payments are not guaranteed. They are also not wages, although sometimes a form of compensation, but not always. And on the 1040, they're kind of hiding in plain sight. You can't even find them. So if you're not careful, you might miss them altogether. You could double count it. You might think they're promised when they are not. So we're going to break this down, make sure you're handling them right in individual, entity, and global cash flow analysis. So let me pitch it back to you, David. Why are they not guaranteed? What the heck does that mean?
Well, Linda, despite the actual name in itself, guaranteed payments are not guaranteed in the way that most people think. Now, they're agreed by the owners of the 1065 entity. Now, that could be partners in a partnership. It could be owners, members in a limited liability company. In our training, at our frontline trainers, basically, when we work with the lenders and credit analysts, we basically suggest maybe they should use the term agreed to rather than guaranteed. We think that actually clears up some of the confusion. And these business types, as you mentioned before, the owners don't necessarily receive wages. They receive compensation often through distributions, which is a share of their earnings, basically the profits of the company. Sometimes the guaranteed payments are kind of a recognition for what work they've performed, sometimes the capital that they've contributed, or an internal agreement. But here's the kicker. Guaranteed payments can change. They're not locked in by law or any specific contract in most cases. So we need to treat them as they are, past cash received, but not a future promise. Just like distributions, we need to kind of look at the K1s to kind of see what typical pattern is going on here. Is there some sort of consistency of payment? Now, here's how we recommend handling it. If it's historical cash flow, count the guaranteed payments as cash received. Now, if it's projected cash flow, we generally count the guaranteed payments as recurring unless we have reason to believe that something, maybe they won't continue. For example, maybe the owner's leaving the business, retiring, etc. Maybe their role's changing. Or, heaven forbid, maybe the business is struggling and they just don't have the cash flow. So if these things happen, wouldn't we want to reconsider if we're going to rely on those numbers? Linda, you mentioned the 1040 tax return earlier. So if owners actually receive this cash, where do I find them where do I find guaranteed payments on the tax return?
You don't. So sorry. No. If you're looking for, like on a 1040, if I was an S Corp shareholder and I paid wages out of the S Corp, you'd see wages on my 1040. If I am a 1065 filing owner, so again, LLC partnerships, as you mentioned, and I'm part of what I get paid is guaranteed payments, that those words do not show up on my 1040. And here's why. Guaranteed payments are one portion of the taxable income passing through from that entity. So ordinary income, my share, passes through onto the 1040 Schedule E on the back of the page. Guaranteed payments gets lumped in with that. So the number you will see is on the 1040 Schedule E back page where they list 1065, 1120S, which again, LLC, partnerships, S Corps, they'll list it as non-passive income because in most cases, if I'm getting guaranteed payments, I'm involved in the business. And we will do a live stream on non-passive versus passive coming up. But you'll see it there, but it'll only be called income. It won't be called guaranteed payments. And to make it more confusing, when you look at that number, you can't tell if there are any guaranteed payments in there. It might just be pass through of ordinary income, or it could be a mix. And there's absolutely no way to tell when you don't have the K1, which brings me to the solution here. And that is that if you want to know what an individual owner actually took home from a 1065 filing entity, you must have the K1. True, actually, for S Corps too. We'll cover that one in a different live stream. But in this case, the guaranteed payments and the distributions combined do show up on the K1. And then as David mentioned, whether we use them for projection might depend on what several K1s look like, what we know. For example, what if it was a final K1? Then I'm not sure I care what the last 3 years looked like if they're out of it. We'll talk about final K1s in other live streams too. So we're trying to keep these topics a little short so that we can have shorter little live streams. But the key here is guaranteed payments. And actually, I think I'm about to say what I thought David was going to say next. But let me switch to David for this piece. I just told you what it looks like on the 1040. Where do we see this on the entity return, and what do we do with it there?
Linda, when you talk about the entity cash flow, we're basically looking at the entity as a standalone bar without guarantors. The guaranteed payments are actually expense on the front page of the 1065. But if we really care about the funds staying within the entity, we need to do a little bit more. I mean, we have to subtract distributions, but distributions to all guarantors or all owners in the business, as well as if they have capital contributions, we need to consider that of all the owners that have contributed money in there. Now, on the other hand, what we mentioned before, if you're dealing with strictly the guarantors, well, that analysis goes hands in hands into the global analysis. The entity's cash flow out is the owner's cash flow in. So I know all this stuff gets a little bit confusing when we're talking about M2s on the tax returns. Actually, on Lenders Online, Linda, we have 3 modules that specifically talk about the 1065. So if anyone's confused, I'd consider taking the training. I think it's excellent coverage on that. So Linda, any follow-up things as we wrap up here?
Yeah, let me just make sure we hit the highlights one more time for you. Guaranteed payments, not guaranteed. And David mentioned, think agreed to, not guaranteed. That will be more clear for you and for your direct reports, people that you're responsible for. They are not wages, but often are a form of compensation. They are deducted by the entity on the 1065. They are taxable to the owner, but they get mixed in with pass-through, so you cannot tell. And when you actually need to know what the actual cash flow is to an owner, including guaranteed payments, you do have to go back to that K1 to calculate actual cash flow. Now, I think we have a banner for our email address at the bottom of the screen. What we would love for you to do, if you have more questions on this or any questions about K1s, on pass-throughs, or anything about tax return analysis, we take questions. We actually answer those questions, and sometimes those questions become live streams and blog posts as well. We always answer. In addition to that, you can come to lendersonlinetraining.com, and that is where we do that foundational actual training. We see these programs as kind of insights for you. If you want actual training where you're working with case studies, you're working with tax returns, you're working with worksheets, and we're working through all the different schedules that do make a difference, lendersonlinetraining.com. Thanks again. See you soon.